Hey, what's up, everybody? It is Thursday, April 7th. How y'all doing? I hope everybody's feeling well. Alright, let's go over what's going on. So, first, the fiscal update. Let's go through that. Of course, you know fiscal, that is the core of my analysis. That's the basis of the MMT. So, spending right now, government spending, now up $748 billion over where it was last year. And again, I repeat this every day. Last year was a record spending year. We are now up $748 billion over where we were at this time last year. That is it's unprecedented. It is an enormous amount. Just to give you some idea, at this time last year, and again, last year's spending for the fiscal year was a record year. At this time last year, spending was up about $200 billion over the previous year. So it has increased 3.5 times. The growth rate of spending is at 24% year over year. Last year at this time, spending was growing at 7% year over year. So obviously, the fiscal support to the economy has been enormous. It has been unprecedented. You know, we're almost already at $4 trillion. We still have what? May, June, July, August, 5 months left in the fiscal year. So we're going to be over probably $6 trillion for the year. That's enormous. I mean, last year we were at $5 trillion. The deficit is at $1.4 trillion. Now that was as of last Thursday, $1.4 trillion. It could be higher than that right now. I mean, that already, on a nominal basis, that is the biggest deficit ever. On a percentage of GDP basis, it's around 7%. It depends what the current GDP is going to be. It could be a little bit higher. It is not the biggest on a percentage of GDP. In World War II in 1941, the deficit hit 34% of GDP. That would be like having a deficit of $7 trillion right now. We have about, what, a $1.4 trillion deficit. But the deficit is good. Remember, the deficit of the government equates to the surplus of the non-government. That's us. That's me, you, institutions, everything that is not the government. So if the government is an additional $1.5 trillion to the negative, that means it spent $1.5 trillion more than it took away in taxes. That $1.5 trillion went into people's pockets, firms' pockets, etc. And it's obvious to see because savings are at an all-time record high right now. Now, you're not going to hear that in the mainstream media. Obviously, they're going to be crying and screaming and going nuts about the deficit, but they don't understand it. It is like mythology to them, and they just keep repeating the same wrong understandings. And this has always been an impediment to policy. Now, we're seeing the policy is reacting to the dire circumstances of the economy, and that's why we're seeing the increase in fiscal support. Unemployment benefits now at $85 billion. This is one of the largest line items now. I mean, right after Social Security, the military and defense complex, Medicare, Medicaid, education, and federal salaries, it falls right beneath those. And there's many other items in that spending list, and I said yesterday, unemployment benefits were at $17 billion in April, not even a full month ago. They're at $85 billion right now. So we have that. That's part of the automatic stabilizers. That is helping tremendously. Let me talk. The worst is over. I will say this flat out. The worst is over for the economy, at least for now. And the reason I say this is because I track tax revenues to the federal government. There was a total collapse in tax revenues at late March all through April. I mean, if you saw a chart, it was like really, it fell off a cliff, and that was due to the closure of the economy. And that just kept getting worse and worse and worse as the weeks went by. But that has now bottomed out. So the economic contraction, this is the worst we will see, and actually it's going to start to improve from this point forward because things are starting to open up once again. All right, it's important. Things are starting to open up once again. The tax receipts are telling us that the worst is over. And hopefully it doesn't get any worse. And I say hopefully because, of course, this is the big, $64,000 question. Whether we opened up too soon. Now, a lot of people are saying, okay, it's too soon. You're going to have a renewed spike in infections. You're going to have another round of shutdowns. We don't know that. All I'm saying is right now, we have seen the word, and I told you this many videos ago. I said that the collapse in the stock market from the February peak all the way down to the lows in April, the Dow went all the way down to like 18,000 or something like that. That discounted, all right, the stock market was reflecting what was going to happen to the economy. It doesn't know, the stock market doesn't always get it right, but I felt that it did have it right in that very, very severe sell-off that we had. And now we're starting to actually see that the stock market's behavior, this bounce back, is already forecasting that things are going to start to pick up. So really, what we have to think about is, or what we have to look for, because we can think about it all we want. We have to know the reality. We have to know what's going on, whether or not we see a new spike in infections, and if that leads to another round of closures. That would be bad. That would be the second leg down in the economy, in the stock market. But for now, when you look at those tax, and by the way, I have a beautiful chart. If you want to see that chart, sign up for the 30-day free trial of MMT Trader. Go to my website, pitbulleconomics.com. Sign up. The link is right here. You could just click the link in the description right here. So, one more thing, let me just add, let's talk a little bit about the Fed's liquidity swaps. Those are the Forex swaps that the Fed conducts with foreign central banks. We saw the smallest increase in those swaps in 7 weeks. All right, it was up 5.9 billion. The prior week was up 29 billion. March 25th, it was up 206 billion. So we have seen a tapering off. So to me, that suggests that this dollar shortage situation, the dollar squeeze, it's starting to dissipate. It's not completely gone because the Fed is still conducting these swaps, and the total amount outstanding has not come down in terms of these swaps. But the weekly amount is starting to decline, and that is a good sign. So when that happens, it tells you that the pressure is off on this dollar buying. But if we see additional dollar buying at this point, you could really chalk that up to just speculation as opposed to that technical condition when the market was short dollars. And that, to me, would set up another shorting opportunity for the dollar. Gold had a nice day today. Gold is in a bullish trend on its own fundamentals, very low mine supply. We haven't seen, I think I mentioned this in my last report, my last video, we haven't seen a lot of hedging by commercials for the last 2 years. They obviously know that supplies are tight, demand is strong, gold's in a bullish trend. Whether you want to talk about gold as a haven against whatever's happening in the economy, that's not why I'm saying this. I'm saying it is in a bullish trend on its own fundamentals. All right, everybody, that's it for today. Go to my website, sign up for a 30-day free trial of MMT Trader. You gotta put the concepts and the understandings of MMT on your side when you trade and invest. That gives you a huge advantage. Go to my website, pitbulleconomics.com. Sign up for a 30-day free trial. See you tomorrow. Bye-bye.